Hi guys, welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly answer your queries with the help of our experts during the show. So guys, please keep commenting on our live feed and we'll have your questions addressed by our guests later. But before bringing them on board, let's see what the global handover looks like. European markets back in the red once again as investors ponder economic risks in the region, reignited by concerns about the energy supply from Russia. Stoxx 600 ended down by 0.6%, having recouped some of its earlier losses. Meanwhile, Asia markets are trading with a positive bias. Barring Hang Seng, most of the indices are edging higher in trade. SGX Nifty hints at an open above 17,700 for the Indian markets. Meanwhile, Wall Street was shut last night on account of Labor Day, but US futures are mildly positive this morning. And in focus was the OPEC meeting. OPEC said it would cut oil production next month, the cartel's first output cut since the depths of the pandemic, as it braces for a global economic slowdown to hit demand. And finally, stocks in the spotlight today are VMart, Delhivery and Hindustan Aeronautics. We'll discuss the technicals later. All right, let's get going and talk about the big topic, which is OPEC's output cut decision. We're joined by Sugandha Sachdev from Religare Broking. Morning, Sugandha, and talk to us about the announcement of output cut by 100,000 barrels per day. Oil has clearly reacted to that in a positive way. The prices did shot up quite a bit. Talk to us about whether it's on the expected lines and what it means for the entire demand-supply scenario.
Yeah, hi, good morning, Karunya. In terms of the production cut, it's a modest increase by OPEC plus producers, and this is largely on expected lines. If you see oil prices, they have been on a losing streak for the last 3 months. And they have almost shed around 32% from their recent highs of $140 a barrel for Brent crude, which was seen after the Russia-Ukraine war and due to the supply constraints. But then as of now, OPEC Plus has given a clear signal to the market that they are ready to intervene in the market and they are there to come out with production cuts or increase in output to stabilize the prices. We've already seen prices declining significantly lower, all because of concerns about economic slowdown. And also the fresh COVID-19 curves in China are leading to a scenario of sluggish demand from China, which is the world's top oil consumer. So all of these factors were the major reason. Besides this, there are expectations that US and Iran are likely to revive their nuclear deal, which will lead to an additional supply of around 1.1 million barrels per day into the oil market. So that was a major reason OPEC Plus decided to increase their to cut down their output by around 1 lakh barrels per day. So now they have restored their production to August levels itself. And they've also hinted at the possibility that they can come out with further production cuts in case that's required and in case we see prices declining further. So all of these triggers are taken positively by the markets, but we have not seen much reaction coming in the prices because this was largely on expected lines. And besides this, President Joe Biden has recently maintained that he will come out with further measures to suppress prices because that has been actually fueling inflation significantly higher, wherein inflation in the developed world is very close to 40 high. So these are the major factors which are actually playing out in the oil markets as of now.
And what happens to prices then? Because, if we look at oil, it has fallen for 3 straight months after touching those multi-year highs back in March 22. So talk to us about the pricing trend that you foresee for the rest of the year. Which way is it headed?
See, as of now, demand has been robust. IA has recently maintained that demand is likely to increase by 2.2 million barrels per day through 2022 and similar levels in 2023 as well. Even as the global economy is showing signs of a slowdown, but then the overall demand, if you see, has been robust. And in terms of the oil levels, if I look at the Brent levels, $91.5 mark is acting as a very strong cushion area for prices for a very long time. So I will not stick my neck out and say that, yes, prices have bottomed out. But yes, they are clearly showing signs of base building at lower levels. And there is a high possibility that prices will react to this recent news, even though it's a modest decline in output by OPEC plus producers, but then market will certainly perceive it as a positive trigger. So on the higher side, we need to see a clear breakout above $102 a barrel for Brent crude. Only in case that is breached and we see prices nudging past that level, we are likely to see levels of $110 to $115 a barrel in coming days. So overall, the outlook is positive, but yes, we still have to be cautious. In case the level of $91.5 a barrel is breached, we can see prices slipping significantly lower on the downside.
All right, great. But what about the overall trend? Because if we look at the natural gas prices, they have been soaring quite a bit. In fact, IEA has also, said that they expect gas to oil switching in some countries because of the record gas prices. So, do you think natural gas price trend will sustain the way it is, and oil will continue to hover in this range that you just flagged off?
Yes, Karunya, yes, Russia has recently stopped flows of natural gas through Nord Stream 1 pipeline, citing maintenance issues. And so that is likely to deepen the energy crisis, which Europe is actually grappling with at the moment. And even though inventories are at healthy levels of around 85% in Europe, but then we are approaching the winter peak season. So in case this supplies continue to be, halted from Russia, that can actually lead to a lot of gas to oil switching, and we can see increased usage of oil for power generation. So that is a very supportive trigger for oil prices. But then as of now, we also look at the fact that inventories are almost 85% in Europe of their total requirements. So this is a slightly negative trigger for natural gas prices. Besides this, production in US has also been rising, and there are increased LNG imports into Europe. So all of these factors are actually suppressing natural gas prices to a certain extent. Apart from that, high prices are also leading to demand destruction. So there would be some gas to oil switching, but then that would not lead to significant upside in crude oil prices as of now. In the backdrop of dollar index surging to 20-year highs, and also the environment of tightening monetary conditions, and President Joe Biden maintaining that he will take all measures to suppress oil prices. And we also have to have a look at this Iran nuclear deal. In case that is revived, that will lead to additional supply in the market. So all of these factors will keep playing out and will lead to an overall sideways movement as of now, as long as $91.5 a barrel is holding. And if I talk about the Brent WTI prices, I see a very strong support emerging in $85 a barrel. So as long as that level is holding, I think the trend is positive. But yes, in case that is breached, we need to be cautious. That can lead to accentuated fall in prices towards $76 a barrel for WTI crude. And if I talk about Brent crude, we can see prices slipping toward $85 a barrel as well in coming days.
Okay, well, thanks much, Sugandha, for joining in and for talking to us in detail about the pricing trend, especially for oil and natural gas as well, how it's likely to be in the next few months as well. All right, let's move back and focus in on markets and what could be in store for us. Let's talk to Shrikant Chauhan from Kotak Securities, who joins us now. Morning, Shrikant, and thanks for joining in. Talk to us about the trade setup that we're working with and what kind of a session should we brace ourselves for.
Good morning, Karunya. Good morning, everyone. I think, the Nifty is very clearly heading towards its upward breakout level, which is very close to the levels of 17,730. Since last 3 days, in fact, market was consolidating between the range of 17,730 and 400, but eventually yesterday, on Monday, when the market was under confusion at the opening, we saw some specific recovery in almost all the large cap companies, and on the basis of that, we saw the market was closing to the highest point of the day. So broadly, we are of the view that on the dismissal of 17,730, which is the breakout level, above that, the chances of hitting 17,900 or 18,000 would turn bright. So the strategy should be to look for adding long position on Nifty, on indices, if we see the Nifty is crossing the level of 17,730. And for the Bank Nifty, we saw a breakout in yesterday's trading session. The Bank Nifty has broken the level of 39,800. In fact, it closed about the same. So the next level to watch out for would be 40,500. But for that, we need activity in the other stocks, other indices of the market. So if we see the Nifty is crossing 17,730, then yes, we may also see activity in the Bank Nifty. So broadly, we should be buyer if there is any correction, or if we see the market is crossing 17,730.
Okay, all right. We'll keep those levels in mind. Let's also talk about some stocks that could be buzzing in trade on back of some news flow. The first stock I'd like to flag off is VMart Retail. Jwalamukhi Investment Holdings has exited the stock. They've sold their entire holding, which is close to 14 lakh shares in the company, at an average price of 816 rupees apiece. Plutus Wealth, in the meantime, has bought about 5.8% stake, again at an average price of around the same level, 28.15. The stock is close to 28.90 levels, Srikanth, right now. Of course, there could be some reaction to this bulk deal, but overall, how is the chart placed?
Okay, so whenever there is a bulk deal or any big deal happens in the market, we need to keep a close watch on the weighted average price of that particular deal. So yesterday, the weighted average was around 28.90, and today we need to see that whether the stock is managing about 28.90 or below that. So about 28.90, the chances of hitting 3,200 would turn bright. Below 28.90, again the chances of hitting 2550 or 2600 would turn very, very high. So broadly, when yesterday we saw some deal in the stock was in the middle of the trading range, and that's the reason we are of the view that we should focus on the level of 2,900.
Okay, all right. Important level to watch out for then. Moving on to stock number 2, Delhivery. SBI Mutual Fund has bought additional stake in the company by acquiring about 1.07 lakh shares via open market. Their stake has now increased to 5% overall in Delhivery. There's not much of a historical pattern to track here, but if we look at the trend, especially last couple of months, it's off 20% from its all-time highs. Good time to dip in at these levels?
Yeah, I think the sector-specific activity is much confident, and we saw activity in almost all the logistic companies in last few weeks or few months. No doubt, after the listing, the stock went to the extreme levels of 700, and from there we saw some profit taking because of the broader weakness in the market. But I think since last almost 15-20 days, the stock is managing well above the mark of 540, 550, which is positive. But there is hardly any reversal, any signal or formation on daily charts. So we are of the view that it is going to spend or consolidate furthermore between the range of 580 on the high side and 500 or 530 on the downside. So we need to focus on the range, and based on that we can place our bets. But if there is a medium to long term view, then certainly we should look for holding this stock for the target of at least 650, 660 on the high side.
Okay. The third stock we want to flag off is Hindustan Aeronautics. There's a deal win here to look forward to. HAL and L&T consortium has bagged a deal worth 860 crore rupees from New Space India to build 5 rockets. And now this marks the industry's foray into end-to-end production of PSLVs. So good developments coming in for this particular consortium, HAL and L&T both. Talk to us about HAL specifically. It's hovering very close to its 52-week high, and it's been a phenomenal year for HAL. Actually, it's gone single-handedly higher and higher and higher further. Talk to us about the trend going forward. Do you see some consolidation at these levels, or do you think there is more steam left to this up move?
Yeah, I think the way the stock moved up, it was around some 600 levels in the month of November 2021. From there, we saw a vertical rally in the stock, and there was hardly any correction in between. So I think currently the stock is certainly at its extreme levels, but at the same time, the way there is news flow and developments from almost all the sides, whenever there is a specific news flow from the government, we are of the view that we should be buyer if there is any correction in the stock. Today, if we see the stock is opening on the higher side, then we should stay away from taking any bet, because currently it is into overbought territory of the short-term trading range. But in case if there is any correction because of any reason, then close to 2250, 2300, the stock is having excellent support. So there we should be buyer. But today, if there is any higher opening, then we should look for taking some profit on the long positions.
Okay, all right. Since we're talking about a PSU, let me flag off the first query for the day, which is also on a public sector company. Vignesh has written to us and he wants your view on BPCL. Now, if I had invested my money in BPCL 3 months ago, it hasn't really worked for me. The returns have been completely flattish. But now, is this a PSU which you like as well, or should one stay away right now?
I think it is better to stay away because it is very sensitive to the activity or the price activity in the crude prices. So it is better to stay away because the stock is completely following to the Brent crude prices and they are highly volatile and we are actually not uh, sure that where the price will move from here. So it is better to stay away. Yeah, if there is a view of next 3 to 5 years, then certainly we should be buyer because they are available at decent support levels. But in the short term, we are not expecting any major activity. I think Reliance is the bet where one should look for adding positions or to invest with a medium to short term view.
Okay. Moving on to some more viewer questions and queries. Praveen is writing to us. He wants your advice on Kotak Mahindra Bank. And of course, this was the cynosure of all eyes yesterday as well with, speculations about a possible merger of Kotak Bank with Federal Bank. So talk to us about Kotak specifically since that's what the viewer wants to know about. How's it looking on the technicals?
See, there is a compliance issue, and because of that, we cannot talk about the company in which I'm actually working. But I think if we take the broader view on the sector, then almost all these large cap banks, they are doing well and they are going to do well in the medium to long term. And yes, there are like number of mergers and consolidations are happening in almost all the sectors. So we are going to see a lot of activity in the sector, and we should be buyer if there is any correction in large cap banks.
Okay, great. A lot of questions actually coming our way from the PSU space. Let's talk about Coal India. Ayan Chakraborty has written to us and he wants your view here. Coal India again has seen a phenomenal run up, last 5-6 months this year from, I think, May lows of 130 odd levels, 150 odd levels. Right now hovering around 52-week high. Do you think more legs are there for this rally?
Certainly, I think Coal India is showing a lot of resilience at every decline. In fact, it is finding specific buying interest from the fresh round of investors. But we are of the view that again, the company is very much sensitive to the news flow, which are like highly uncertain from the ministry of that particular sector and all. So it is better to stay away from taking any large. I'm to say it is better to stay away from investing any large chunk into the stock. Yes, if there is like a very medium to long term view, then we should look for taking some very nominal stake in the stock. I'm to say stake in the to invest very small amount in the stock. But I think it is better to focus on those companies which are in the particular sector like Tata Power and which are less concerned or maybe less impacted with the overall news flow.
Okay, all right. Moving on to the next query, which is for CDSL. Varun Mandrotra has written a comment and he wants your insight on the technicals of CDSL. Now, this one again, very range-bound trade last 3-4 months. Is that trend likely to sustain?
Yeah, for CDSL, yes, the stock is exhibiting a lot of momentum and especially when the stock was around some 1250, 1240 levels, we saw specific buying interest in the stock. The volume as well as price breakout is clearly indicating us that the stock is heading for at least 1430, 1450 in the near term. It is forming some ascending triangle sort of formation. So certainly it's a buy at current levels and more on days.
Okay. Meanwhile, Trilok is also sending us a post. He wants your view on Devyani International. It has cooled off a tad actually from its recent highs, trading well below that 200 rupees mark. Important levels to watch here. Can you flag it off?
Yeah, I think the stock was around 215 levels some few days back. From there, all the way the stock has corrected back to the retracement support area of 177, 178. And again, it is turning up. So already the stock has formed reversal formation and we can again expect pullback to the recent sell-off. So the chances of 205 or 207 are very, very high. So again, we should be buyer at current levels with the stop loss somewhere close to 180.
Okay. I know you've addressed larger private sector lenders, but we have a query on a mid-sized one, IDFC First Bank. Kishore Borkar is writing to us. So how is this one placed?
So IDFC First Bank is also moving upward, and even though it is like it's a gradual up move, but I think it is quite interesting. And on a regular basis, we are seeing upward activity in the stock. So I think the stock is heading towards the levels of 57, 58 based on technicals. And there the stock is having next important resistance. But still, even if like at current level, somebody really want to invest in IDFC Bank, then it is better to invest in IDFC Limited, because there we are seeing a lot of activity and the stock is already very close to its 52-week highest level. So above 70, we are expecting stock to move towards 90 very quickly. So it is always better to buy IDFC Limited as compared to IDFC First Bank.
Okay. The last query that I want to take for the day, this is from Abhay, and he wants your advice on Wipro. Again, very, very listless, range-bound last 3-4 months. Is that a trajectory that one should expect in the future, in the near-term future as well?
In the near-term future, we are not expecting any major activity in either Wipro or in any other technology company. But if there is a medium to long-term view, I'm going to say if there is a view of next 6 to 12 months, then certainly we should be buyer in such type of companies, because they have already fallen to their extreme levels. Markets are very close to the almost at an highest level of the entire range. So in case if there is any specific positive news flow for the sector because of any development in the US markets, then we can expect substantial bounce back from current levels. But it will take time. We are not going to say we are not going to decide that when the bounce back will come. But yes, in next 6 to 12 months of time, certainly we are going to see a good amount of returns from the IT companies.
Okay, all right. Srikanth, we've discussed a lot of mid-cap companies today as part of our queries, but I know you have 2 very large caps lined up for your stock picks. So talk to us about which companies are they.
Yeah, I think as we mentioned that the markets are very close to the breakout level, we should be buyer in large cap companies because they are part of index and also they are very close to their important breakout levels. And yesterday they formed a reversal formation. So Sun Pharma looks really good at current levels, which is around 885, 886. There we are expecting 920, 930 sort of levels. It is forming double bottom formation on a daily basis. So it's a buy with a stop loss at 870 on the downside. And the other stock which we like is Reliance Industries. Here also the stock has completed its corrective pattern at 25.20. From there, yesterday all the way close to the levels of 25.60, 25.70. So from here, the chances of hitting the next levels of 26.50 to 2700 are very, very high. So 26.25, 26.30 should be the level to take any short-term position on this stock, with a stop loss at 25.45 on the downside.
All right, so thumbs up to Sun Pharma as well as Reliance Industries. Thank you so much, Srikanth, once again, for joining us this morning and talking to us and helping our viewers out as well as always. Thank you. With that, we're going to wrap it up on Morning Trade. Stay tuned. Markets with Santo and CJ comes up next.